Welcome to ForexTV.com's Forex Market Buzz. Today is Wednesday, April 30th. I'm Caitlin Sisney. The dollar is headed for its first monthly advance against the euro this year on speculation a cut in interest rates by the Federal Reserve today will be followed by comments signaling policymakers finished with easing. On the economic data front, U.S. GDP growth came in slightly above forecasts in the advance report for the first quarter of 2008, as the economy expanded at a sluggish 0.6% rate, repeating the performance seen in the final quarter of 2007. Meanwhile, the NAPM Chicago Business Barometer remained below growth levels for the third consecutive month in April. The headline PPI came in at 48.3 in April, against expectations that it would fall to 47.5. Also, the report from ADP Employer Services showed that the U.S. companies added 10,000 jobs in April. Today, we're joined by Adam Button from CEP News. Thanks for joining me today, Adam.
Great to be here.
Adam, you've spoken with strategists about today's interest rate decision. What have you gathered as far as expectations for a rate decision?
Well, Caitlin, it seems as though market strategists are widely expecting the Fed to cut by 25 basis points, 2:15 this afternoon Eastern Time. Looking at a variety of metrics in the market, there's between about an 80 and 90% chance priced into different markets that will happen. We can expect that's priced into the Forex market as well. Looking at the euro-dollar, for instance, we saw it begin to be priced in yesterday, or finally priced in yesterday, as we saw the euro selling off. So most strategists, I would say nearly all strategists I talked to, are expecting a 25 basis point cut from the Fed. Would be quite surprised if that didn't happen.
Okay, so if that 25 basis point cut is made, what do you see happening to euro-dollar?
Well, now that's where it really gets interesting. We have two possible scenarios really coming in with that. One is that the Fed will indicate that that's the end of the rate cutting scenario, and another is that there will be some indication that they may continue to cut at the next meeting or at subsequent meetings. There is most of the market is speculating that the Fed will send some sort of signal that this is going to be the end of the rate cutting cycle. So we would then see a nice rally in the U.S. dollar that would make some people even call for the end of the U.S. dollar decline and a start of gains. So we might see the euro initially fall back to 155. It's currently at about 155.60. So we could see it fall to 155, even below 155 initially. And some people calling that the big bottom in the U.S. dollar. And on the other hand, if we do get some kind of signal, now it seems increasingly unlikely that we won't get that we will get an indication that the Fed is done cutting. So the market is skewed. So we could see a big bounce in the euro. Strategists are saying up towards 155 or even higher if the Fed says there's still economic risks going forward.
Okay, so on the other hand, if we don't see an interest rate cut at all, what effect do you think that would have on the dollar?
Well, there would be I suppose, a massive dollar rally on that. We could see upwards of 2 cents in the U.S. dollar if we do get no indication that there is going to be further rate cuts, that the Fed is now concerned with inflation. That would be a big departure. It wouldn't be a surprise if some Fed members voted for no cut. We've seen that in the past, so there could be some dissensions. But strategists I've talked to would be very surprised. This Fed has been very good at communicating what it's doing ahead of time, and it has not surprised the markets in the past. So easily we could see a 2-cent rally in the U.S. dollar, and we would see broad-based U.S. dollar strength as people begin to price in further rate hikes going into the end of the year and into next year.
Okay, so switching gears a bit and moving ahead to the end of the week, what is your outlook for Friday's non-farm payroll report?
Well, now that's where it gets really interesting. If we do see the Fed signal some sort of pause or some sort of wait and see, then the focus of the market immediately will shift to the economic data coming out of the U.S. And right away on Friday, we have the main non-farm payrolls report. Economists currently expecting about a 75,000 job loss in the month. We had this morning ADP payrolls, which indicated something in that range, maybe something a little bit better. But we want to see, if we get a wait-and-see approach, what the economic data comes in at. So immediately there would be a big focus on economic data, specifically this non-farm payrolls. And we could also see, given with that, a cap on the move the U.S. dollar makes today until Friday. If the Fed does signal a wait-and-see, we may see a bit of a pause in what people will, in dollar selling, because they will want to see what the non-farm payrolls will be coming out later in the week.
Okay, thank you so much for joining me today, Adam.
Thanks.
That's all for this edition of Forex Market Buzz. I'm Caitlin Sisney. Join us later for PM Exchange right here on ForexTV.com.